Most beginner traders think trading is all about finding the perfect level. They draw support. They draw resistance. They mark supply and demand zones. They find trend lines. They look for order blocks. And then the moment price reaches the level, they enter. It tells you where price may react, but it does not guarantee the price will react. That is why smart traders do not enter just because price touches a level. They follow one simple rule: level first, reaction second, entry third. This rule can change the way you trade. Let's break it down. The first step is the level. This could be support, resistance, supply, demand, a trend line, or a key price area where the market reacted before. It is only your waiting area. Many beginners make the mistake of treating every level like a guaranteed trade. They think, price, is it support, so I should buy? Or they think, price is at resistance, so I should sell. But the market does not care about your line. Sometimes price respects the level. Sometimes it breaks the level. Sometimes it fakes a breakout, collects liquidity, and then reverses. So if you enter too early, you are basically guessing. And guessing is not a trading plan. The second step is reaction. This is where smart traders become patient. When price reaches your level, you do not rush. You watch how price behaves. Does it reject the level? Does it slow down? Because the trader is no longer buying just because price touched a line. They are buying because the market showed a reaction. That is a big difference. Now the third step is entry. Only after the level and reaction are clear, then you look for entry. If the answer is not clear, you skip the trade. This is another thing smart traders understand. Not every level deserves a trade. Sometimes price reaches your zone, but the reaction is weak, and that is okay. Missing a trade is better than forcing a bad entry, because your job as a trader is not to trade every move. Your job is to wait for high-quality setups. The market gives many opportunities, but not all of them are worth taking. One of the biggest differences between beginner traders and smart traders is patience. Some use retests, some use volume, some use candlestick closes. The exact method can be different, but the idea is the same. Do not enter blindly. Wait for the market to show you something first. Here is a simple example. Let's say price is moving up and reaches a resistance zone. A beginner trader may sell immediately. But what if price breaks through resistance and keeps going? Now, the trader is stuck in a bad trade. A smart trader waits. They watch the reaction. But it is a smarter entry, because the trade is based on structure and reaction, not emotion. This rule also helps with stop-loss placement. When you wait for reaction, your stop-loss usually becomes more logical. You are not placing it randomly. You can place it above the rejection area, below the support zone, or beyond the structure that made the setup valid. That means if price hits your stop loss, the setup is probably no longer valid. This makes trading less stressful because you are not reacting to every candle. You are following a process, and in trading, process is everything. You can have the best strategy in the world, but if you enter too early, chase trades, or ignore confirmation, you will still struggle. A smart entry can improve your trading because it forces you to slow down. It stops you from trading every touch. It helps you avoid fakeouts. It gives you better trade planning. It makes your decisions cleaner. So before you enter your next trade, ask yourself 3 questions. First, where is my level? Second, where is the reaction? Third, where is my actual entry? If you cannot answer these 3 questions clearly, you probably do not have a clean setup yet. Wait, plan your risk. Take the trade only when the setup is clear. That is how smart traders think. And that is the smart trader's entry rule.